The market doesn't look pretty at all. Everything is going down, and so the altcoins that speculate on leverage, the altcoins that are platforms enabling even more risk-taking, they tend to go down as well. Now, Aster, a decentralized finance platform backed by Binance, is going down with the market. Unfortunately, it's underperforming the general altcoin market even more. This is the Aster price relative to the others market cap. And at launch, we saw very nice outperformance, more than 300%. But for the last 2 months, we tend to underperform slowly, and we are still rather on the upper end of the trading range. Now, back in the day when Aster launched, everybody got extremely excited about perpetual futures. It's a very efficient way to transact within crypto, and it's also a very rapidly growing sector within the crypto market. The problem is that the flash crash turned around the entire momentum. Here is the total value locked of Aster. This jumped up with an incentive program, an airdrop on the Aster platform. Once the cutoff was made, we already saw first declines in total value lock. But it's not just the capital that's going down, it's also the trading volume or the usage of the platform itself that tends to rather be on the decline. This is not necessarily Aster specific though. Here is the TVL on Hyperliquid. So that's the largest decentralized perpetual futures exchange. This is why Binance supported Aster, just to compete with Hyperliquid. But here again, right, on the 10th of October, this is when things turned around. Have a look at this chart here. This shows the open interest on Hyperliquid. So how many bets are currently being made on all cryptocurrencies on the Hyperliquid platform? And it looks very much similar for the Aster platform as well. It was a rapidly growing market up until the 10th of October. We peaked at close to 16 billion of bets on crypto prices. Then that crashed down to 6 billion. So the entire long side got liquidated. We saw a bit of a recovery, but now we are even back to new lows. The entire altcoin market fell by more than 47% in the matter of a few minutes. It then recovered, but that's already when all the damage has been done, right? This is when all the longs got liquidated. And this did have a structural impact on the market. Now, the others market cap tends to go down, and today's crash in crypto is just a representation of the general trend now. Just have a look at how the structure has changed. This here is the 10th of October. Before that, we tended to have a positive funding rate. So most people betting on the Aster price were betting on rising prices. They were very optimistic about the asset. Once the long side got liquidated, now the funding rate tends to be much closer to zero. It's not that expensive anymore to bet on rising prices. Or in other words, potentially the market makers, potentially retail investors, many of them lost their shirt. The majority of long investors, they are simply out of the market, and they are not coming back. By the way, we made money on the 10th of October because we bet on relative valuation trades. We bet on rising prices of Bitcoin, Ethereum, and Solana at the same time, betting on falling prices of many altcoins. And again, it was the altcoins that got sold off that much. They had the least liquidity. They had the largest of those spikes to the downside. Was that skill? Was that luck? Maybe a mixture of both. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. The problem with Aster though is that the tokenomics aren't that great, right? This is the long-term supply of the Aster token over time. This tends to inflate, and when there's more and more Aster that hit the market, we need to see the platform grow at the same rate. If we don't see demand grow as quickly as supply, then Aster will likely continue to underperform the rest of the market, completely independent of where the market in general in US dollars is going. This is just about opportunity cost. This is just about how will Aster perform relative to other altcoins. Is the risk worth it? We can already see the impact of token inflation by comparing the price in US dollars versus the market cap in US dollars. The price fell much more, relatively speaking, compared to the market cap. And that's all just because of token inflation. It's all just insiders cashing out over time. And so yes, of course, the Aster price in US dollars could go up if the rest of crypto is expanding as well. But really what we're betting on by buying Aster is that the short-term speculation will come back. But will it come back that quickly after we've seen such a massive scam week, right? When we saw that much price distortion in the market. On chain, we've got 191,000 holders of Aster on the Binance Smart Chain. Here's the number of holders that have some kind of significant holding. On the left side, it's at least 1,000 tokens, since Aster is currently at $1 roughly. That's equal to $1,000. We've got $10,000 in the middle, $100,000 on the right. We can see how the whales tend to go up in numbers over time. The retail investors aren't growing that much anymore. So whatever support we still see in the Aster price is by the heavyweights. But again, I'm not that bullish given that short-term speculative money is getting burned and now even the long-term holders are starting to feel the pain. Have a look at the number of returning and new users over time. This is the last month. There's less and less interest in Aster. Have a look at the number of buyers and sellers on the Binance Smart Chain over time. Also, the interest is declining. And so there's not too much speculation on the token at the moment. This is how much bets there currently are on Aster. So there's not too much short-term leverage baked into the price discovery, which could be an opportunity. But again, are you expecting that the short-term speculator is coming back after the vast majority of portfolios got completely wiped out? I've got my doubts. Now, I'm not talking about this too often on this channel, but I actually have a traditional finance background. So I've studied investment management and financial analysis in Hong Kong. And so I do think it's very important not to be just hyper-focused on crypto. It's very important to be diversified across different asset classes as well. Asset classes that aren't so much correlated with crypto. So even if crypto goes down, that we want to own assets that don't go down, that might even benefit during a crisis. The issue is that stocks are also historically very high. The price to earnings ratio of the S&P 500 is currently at 40. So that implies a real return of 2.5% per annum, less than the risk-free rate right now. This, by the way, this was the .com crisis and this was the global financial crisis. Bitcoin was created over here. The problem is that gold, relative to the money supply, is also quite high. It has only been higher at the end of the 1970s. And we are above the historical average. That's the dotted line. And so this is where this channel is different to other crypto channels. I try to look at the picture holistically. And if you want to dive deeper, I have made many tutorial videos on not just crypto, but on how to do proper risk management and how to do proper asset protection and how to diversify across asset classes and how to optimize long-term risk to reward. This here is a monthly chart of my net worth. And during that time, we did have two massive bear markets in crypto. But if we rebalance our portfolio properly, then we can still make constant outperformance. That's the whole idea. And so if you're in it for the long term, right? If you don't just want to make the moonshot bets that might or might not pay out, if you're actually into wealth building long term, then the premium membership might be for you. A link to premium pops up here on the screen. Looking very much forward to seeing you there as well. Thanks for watching and see you next time. Cheers.